Hey everyone, and welcome back to the channel. Today, we're re-diving into the incredible story of a man who needs no introduction, Warren Buffett, the legend, the Oracle of Omaha. He's inspired millions, and for good reason. He's one of the most respected figures in finance. But seriously, how did a regular kid from Nebraska become one of the wealthiest and most admired businessmen on the planet? In this video, we're uncovering the real story behind Warren Buffett. We'll explore his early life, the powerful lessons that shaped him, and the bold decisions that built his unbelievable $80 billion fortune. You definitely want to stick around for this, because by the end, you'll understand exactly what made Buffett rich, and more importantly, how you can start applying those same principles in your own life. Let's get into it. Warren Edward Buffett was born way back in 1930, right there in Omaha, Nebraska, to Howard and Leila Buffett. From a super young age, it was clear Warren was special. He absolutely loved numbers and could add huge columns in his head, a skill that totally hinted at the financial genius he'd become. Get this. At just 11 years old, Warren made his very first investment. He bought 3 shares of Citi's Service Preferred for $38 each. When the stock nudged up to $40, he sold it, feeling pretty proud of his small profit. But guess what? Soon after, that stock absolutely skyrocketed to $200 a share. That early mistake taught him one of his greatest lifelong lessons, the incredible power of patience in investing. Talk about a tough but valuable lesson. By age 13, Buffett was already a full-blown entrepreneur. He was a paperboy, delivering the Washington Post, and even selling magazines and calendars on the side. By the time he was 15, he had saved over $2,000, that's like $26,000 today. And get this, he invested $1,200 of it in a 40-acre farm, which a local farmer managed for a profit. And at 17, he and a friend bought an old pinball machine for just $25 and placed it in a barbershop. Within months, they owned several across Omaha, earning a cool $25 a week. Eventually, they sold the whole small business for $1,200, another brilliant lesson in scaling and exit strategy, all before Buffett even graduated high school. This guy was clearly destined for greatness. After high school, Warren went to the University of Nebraska, where he earned a degree in business administration. Then, he applied to Harvard Business School, but he got rejected. Can you believe it? But instead of giving up, he made a life-changing discovery. The legendary investor Benjamin Graham, often called the father of value investing, was teaching at Columbia. Warren applied there immediately and graduated with a Master's in economics in 1951. That single decision totally changed his life forever. After school, he headed back to Omaha to work as a stockbroker and even took a Dale Carnegie public speaking course, which helped him conquer his fear of speaking and later teach night classes at a local university. Then, in 1954, Warren's dream actually came true. He joined Benjamin Graham's investment firm in New York, earning $12,000 a year, which is about $109,000 in today's money. He soaked up the fundamental principles of value investing, buying strong companies at fair prices and holding them for the long haul. When Graham retired just 2 years later, Buffett had already saved an impressive $174,000, roughly $1.5 million in today's terms. Simply amazing. So, back in Omaha, Warren decided to start his own investment partnership in 1956 with close friends and family. He asked one partner, a doctor, to find 10 others willing to invest $10,000 each. 11 people agreed, and Buffett started managing their money with only $100 of his own cash. Talk about starting small. By 1960, Buffett was successfully managing 7 partnerships worth over $1 million, with his own share sitting at about 9.5%. Then, in 1962, he officially became a millionaire. That same year, he merged all his partnerships into a single entity and made a decision that would truly change his career forever, buying shares in a struggling textile company called Berkshire Hathaway. Who would have thought that a failing textile mill would become the foundation of such an empire? It just goes to show you, sometimes opportunity looks a little different than you expect. At first, Berkshire Hathaway actually seemed like a disaster. It was a dying textile business in New England. But Buffett, ever the visionary, saw something others didn't. He started buying more shares and eventually took full control after a dispute with management. However, the textile business just kept losing money. So, Buffett made a super bold move. He completely pivoted Berkshire away from textiles and transformed it into a holding company that would invest in other, more promising businesses. In 1967, Berkshire bought 2 insurance companies, and this was the absolute turning point. The steady cash flow from insurance premiums gave Buffett the capital he needed to make even bigger investments. Over time, Berkshire Hathaway acquired and invested in household names you know and love, like Geico, Coca-Cola, American Express, Apple, Dairy Queen, and See's Candies, building an empire now worth over $700 billion today. Just incredible. By 1990, Buffett had officially become a billionaire when Berkshire issued its Class A shares. But here's the really fascinating part. Despite his immense wealth, he continued to live modestly. He is still in the same Omaha home he bought for a mere $31,500 back in the 1950s. That's just wild, right? Buffett is also one of the most generous philanthropists in history. His largest donation, an astounding over $28 billion in Berkshire stock, went to the Bill and Melinda Gates Foundation. He's also famously pledged to give away 99% of his fortune before he dies, setting a powerful example of responsibility and true humility for all of us. What an inspiring legacy. So, what are the key takeaways from the Oracle? Warren Buffett's success isn't just luck. It's built on timeless principles that anyone can apply. First, be patient. True wealth genuinely grows slowly. Second, invest in what you truly understand. Don't chase fads. Third, live below your means, a simple but powerful concept. Fourth, focus on value, not just price. And finally, always keep learning. He often says, the best investment you can make is in yourself. At 94 years old, Warren Buffett remains the ultimate example of how long-term thinking, incredible discipline, and unwavering consistency can transform ordinary beginnings into absolutely extraordinary wealth. His story is a powerful reminder that success isn't about taking shortcuts or blindly following trends. It's about making smart, informed decisions, staying patient, and always thinking long-term. If you enjoyed this deep dive into Warren Buffett's life and want to learn more about how the rich truly build wealth, please don't forget to hit that like button, subscribe to the channel, and turn on the notification bell so you don't miss our next video. And tell me in the comments, what's your favorite Warren Buffett quote or lesson? I'd love to hear it. Thanks so much for watching, and I'll see you in the next one.